Hey guys, welcome back to the cutting edge universe of the Global Business Innovator series right here on the Chamber Guy. Strap in because today we are zooming into the pulsating heart of the blockchain and crypto universe where innovation meets regulation and the future of digital finance is being written as we speak. In the spotlight, we have none other than the blockchain visionary and regulatory strategist, Robert Kopitsch. As the mastermind behind Blockchain for Europe and the guiding force at APCO as the fintech lead for EMEA, Robert has been at the epicenter of shaping groundbreaking EU regulations for crypto assets. His fingerprints are all over the MiCA framework and anti-money laundering directives, pushing the envelope and setting the stage for a secure, vibrant digital asset ecosystem. With a dossier that spans critical roles from the Austrian Ministry of Finance to the corridors of the European Parliament, Robert's tech-forward insights are about to supercharge our understanding of where blockchain can take us next. Robert, it's a thrill to have you with us on the show.
Thanks for having me.
Robert, let's dive straight into the regulatory whirlpool. The MiCA framework has been a game changer, but navigating this hasn't exactly been a walk in the park. How do you pivot and strategize to align a diverse interest and shepherd this through the legislative labyrinth?
So you're right, it definitely wasn't a walk in the park. There was a lot of interest coming in into this regulatory framework that's been in work since 2018, 2017, 2018, yeah. And when you look at what MiCA does, it basically combines old school capital markets regulation, which you've seen all over the world, right? I mean, we used to use existing regulation to tackle crypto assets, digital assets, tokenization, NFTs, etc., stable coins, you just name it. And that was a problem and an issue in a positive way as well. On the one side, you understood what needs to be done, and on the technological side, you weren't really aware where this is heading to, right? It was a very early stage. And then on top of it, Libra came in, which brought in the whole stablecoins dimension, which added the whole payments and banking approach to this thing. So you can imagine there's a lot of interest, there's a lot of complications, there's a lot of, as the European Union is a very diverse and sometimes fragmented place, difficulties to maneuver those things, right? So we as an industry body, Blockchain for Europe, we were advocating for a very tech neutral, very slim, very easy approach to it. Problem is when you have 28 back then member states, now 27 as the UK left, there's a lot of fragmented interest in that. And in order to achieve a coherent approach, you needed to bring them all together, right? The innovators on the one side, the regulators on the other side, and in between the incumbents like the TradFi companies, banks and so on. And there were obviously diverging views on those things. And then at some point you even had the tech companies, right? Like Facebook was in the middle of this basically at some point. And to maneuver all of that, it wasn't easy. And that's why it also took quite a while. And you see a lot of shifts during the process, which I'm not going into detail, but were quite interesting. Plus the debates in parallel on AMLR or AML regulation, right? Which made this also a bit more toxic. Then you had the market influence, right? I mean, there was Libra first, then there was the Terra Luna disaster, FTX happened, and all of them had some impact on all of this. And to soften the landing on some of those was sometimes an overnight or late night exercise. I mean, there was the idea on the table at some point to ban Bitcoin, which we pushed back on and managed to kill, so to say, in policy terms. And yeah, it was an adventure, let's say. I think the outcome is not perfect. There's obviously a way to go. And you see that where we started to where we ended includes all those hurdles and diversions and changes and developments and sometimes business catastrophes. I mean, FTX in particular in the US was a big issue. In Europe, luckily, not so much because it wasn't so present here. But all of them played a role, and now we wait till it's implemented and see how it plays out in practice, right? That's the exciting part now, to see if it actually works. So all the regulators sitting at home like, please, please, please.
Thanks for that. Now, let's touch on tokenization. The buzz is that it's set to unfreeze a whopping $19 trillion in dormant collateral. In your playbook, what's the MVP feature of tokenization tech that makes this feasible? And tell us also, what's the roadmap to getting there?
I mean, tokenization has a number of elements. The first one, obviously, is that you want to make assets that are illiquid or semi-liquid more liquid, right? So it should get easier. Right. I mean, when you look at, and I take a step back now, when you look at digital assets more broadly, right? I mean, some of the key features of it is making cross-border payments, for example, easier. So stable coins have a huge impact. Crypto assets that are used for payments purposes or transfer across borders are hugely useful. You go to South America, Asia, Africa, I mean, they can't live with it anymore. And that's great, right? But that's the emerging markets. In Europe, for example, in the US, this sentiment, unless you have family probably or business partners outside those jurisdictions, it's not really a killer argument. When you look at tokenization, though, this is basically the element that brings Western bankers positive shivers, right? Like they're like, oh my God, so much liquidity available now. How do we use that? How do we do that? So when you look at it, there will be a diversion or a separation in the crypto space between some so-called dump liabilities, which is basically like stable coins, right? You want to have the safest possible financial instrument to make very easy processes even more efficient and cheaper and everything, right? And on the other side, you have smart assets, which are very information driven, right? You want them to be volatile and highly liquid. And I think that's what tokenization will bring to the table. And it will range from anything to tokenized services, tokenized bonds. Basically, you just can tokenize in theory everything. There will be obviously use cases which make more sense, less sense. But I think it will democratize the market, especially for SMEs, right? Because if you're an artist or a gym coach, or run as an SME, but also if you're somebody like Deloitte or McKinsey and you can tokenize the hours of your consultants and put them on the market, right, where you create a secondary market for the services that you have, then right. You can actually also create new values, right? And then the whole financial instrument space. I mean, I personally find commodities very interesting because you can take a step. When you look at commodities, for example, they're normally not regulated under financial regulation, right? Unless they're packaged as futures or something. But if you just tokenize, for example, commodities like rice, soy, even gold, right, and make them more liquid and easy to access, then SMEs in countries that currently have to go through middlemen can basically directly participate in the global market. And that will be super interesting. And all those platforms for these things need to be developed. But I think the key point to get done until that point is regulatory certainty, right? So a lot of people looking at real estate tokenization, for example, this will be complicated because property is a protected good in every country, right? So to fractionalize things, for example, will be very complicated. But once it's done, it unleashes a completely new element and enables groups. Also, like, I'm European, where my generation and the ones after me, for them, it's very difficult to acquire property simply because prices went so much up in comparison to your salaries. And through this tokenization process and the fragmentation or fractalization, you will be able again to acquire over time property. And that's, I think, is something that will be a great game changer around the globe. I mean, there's so many use cases that you can touch upon, and basically every day you hear or see a new one. So I think it's a very exciting field.
Right. Thanks for that. Now, blockchain is not just disrupting, it's rewriting the playbook for financial services. Now, Robert, from your vantage point, which emerging blockchain innovation do you see as the dark horse that could redefine traditional banking models in the next half decade?
I mean, that's a very good question because it doesn't depend so much on the capabilities of the technology, right? It depends on brave innovators in those entities, right? I mean,
Exactly.
I think the biggest problem we're currently having in the blockchain space is not the technology is not there, that the innovation is not there, that the understanding, the willingness is not there. It takes, I don't want to call it visionary because this has something a bit like religious nearly. But you need somebody that goes through the data, goes through the numbers, and takes a leap of faith on some of those technological developments, right? I mean, I had a discussion yesterday with somebody from DTCC, which is the largest financial market infrastructure. And 20 years ago, they were still using, or 25 years ago, they were still using paper to make transactions, right? And nowadays, if you say like, hey, there was a guy running around with paper, bringing the actual transaction to you, so to say, it sounds completely ridiculous, right? And the same will be in 10 years, probably, when we look back and how we do give out loans, how we structure finance, how we let people participate in capital markets in comparison to today, right? Because it will be much easier, much more accessible, much more social. You see social tradings as well, right? There's a trends emerging, and it's all driven in the end by the need of the market, the main participants, which are the citizens, right? I mean, it's very much also macroeconomic driven. But looking at it from nowadays, I think there's a huge potential to unlock some of those capabilities. I mean, the stable coins are a complete game changer, for example, if you want to do cross-border payments or cross-border transactions or hedge against risk, etc. The big problem they have is how to make money, right? Because when you look at Mika, for example, it's a zero-sum game. So you can basically issue a stable coin, but you're not allowed to put on interest or charge a fee or anything because they're considered e-money. And the biggest challenge for those business models, and the same is true for DeFi and so on, will be how to create new business models that attract incumbents and how to make them work. And when you look at GameFi, for example, you will see that there's some of those in developments, right? I mean, most of the new business models we have at hand are coming out of the entertainment industry or gaming industry. And that's why if you want to look at what we will see in the future, I think you just have to look at what's happening there, right? It will be going large-scale subscription models, for example, are a thing that started there and now is basically a thing for literally everything we do, right? Every app is based on a subscription, or every media subscription, sports, lifestyle, everything. And the same will be true for banking, right? When you look into fintechs, nowadays basically have a subscription with a bank or a fintech that provides you financial services, and you can add stuff to it and leave it out and so on. And it's easy accessible on your mobile phone. And I think that's the trend we'll see there as well. I mean, what you need to keep in mind, blockchain is an infrastructure layer, right? It's like HTTPS, for example, right? And nobody cares how it works. You will look at the use cases, right? I think at some point we're not discussing blockchain anymore. We're just discussing new ways of doing things, and they're just by accident might be built on a blockchain, right?
Right. Now, let's touch on this. At the recent DL news event, the spotlight was on tokenization as the next financial frontier. Yet, the path to mass adoption is strewn with technical and regulatory hurdles. Can you decrypt for us the main barriers and your vision for a tokenized future?
I mean, coming at it from a regulatory perspective or a policy perspective, first of all, there's a huge understanding gap still between business leaders, policymakers, regulators, and what's possible on a technical level, right? And to bridge this gap, you need to talk to people. Industry participants that develop those things, they need to go out there and talk about it publicly. They need to talk to media, they need to talk to users, they need to talk to C-levels. And this will take some time, right? Because there is a gap of trust as well, right? It's like coming out with a electronic self-driving car. It's like, okay, looks great, sounds great, but I stick with my BMW or whatever I'm driving, right? Because I know how it works. And again, there needs to be a leap of faith and a level of trust. And that's where we're at now, right? The tokenization technology is out there. The regulation needs to be developed. And there's a need to go out of the financial services space, right? When you tokenize something, it's not necessarily a financial instrument, right? When you tokenize a service of again, a gym coach who just does that because it's helping him to participate in a secondary market for gym coaches where he can challenge his value and see up and down, right, needs, and so on, or any other service. They don't want to participate in a financial regulatory environment, right? That creates costs, friction, difficulty. And the same is true for a rice trader, right? If you're a farmer in, I don't know, wherever they produce rice, India, let's say, you don't want to have to deal with capital markets regulation to participate in that, right? You just want to tokenize your rice, you hand it over, it's sent through the logistics that you have in place, and that's it, right? You're happy, done, and you make some money, and that's it. And this differentiation needs to be understood. And right now, a lot of entities or institutions around the world look at tokenization as a solely financial product. And that's a problem, right? Because we need to find ways to separate those. And that's the first step. And it's funny because I live in Dubai and I see so many projects that do tokenization, and they come to Dubai and it's like, hey, I heard there's a tokenization regime. It's like, yeah, there is, but only if you tokenize financial instruments. And that's pretty much in place everywhere right now, right? So everybody's struggling. If they want to tokenize something like art or so, why would you consider that a financial instrument? I mean, and there's arguments for and against it, obviously, but you need to find a way on how to separate those things. And once this is done, I think then there's a bright future ahead, because then you can create legal certainty, and then you can unleash the business models that are in the trenches right now to wait for this legal certainty to actually get out there.
Right. Now let's pivot to AML. The new EU rules have actually stirred the pot, especially around customer due diligence for crypto transactions. How do you propose we strike a balance between stringent AML controls and fostering a thriving, innovative crypto ecosystem?
I mean, again, this is a lot about education, right? Because from a traditional AML perspective, there's the need to understand who you are, right? I want to know who you are, what you do, et cetera, right? Through the technology that we currently have at hand, like with zero knowledge proof, for example, you're unable to prove your identity or points without disclosing it to anybody, right? So what actually is on the table is like a pseudonymous solution that actually works, right? But needs to be understood. And if you don't understand and trust the technicalities behind it, it's very difficult for you to embrace it as a regulator, right? It's like for bankers when they look at DeFi and they're like, what the hell? And it's a bit here with these technologies. The ones that dive into it, they understand that the automation is beneficial. There's a choice to be made. And in this particular case, there's no such thing as anonymity in our world, at least in the regulated world, no matter where you go, right? I mean, depending on the political system you operate, it's either fully transparent and they know everything, like if you go to China, for example, to other places where it's a bit more private, like in Switzerland or Austria, right? There's still certain things which are very secretive about your finances. And this is also true in the AML context, right? The question at some point will be, do we need those rules at all? Because we actually manage to prove and trace transactions through the system, right? On a public blockchain, you're basically fully transparent. Everybody knows where the money goes, from which wallet it goes to which wallet. And once the person wants to cash out in fiat, how do you stay anonymous? It's not possible, right? So there's a way to track and trace that. When you talk to AML supervisors or people that work in this intelligence space, they all love it because they can basically track any transactions from start to beginning. But through the measures in place, you can combine that with the CKPs of this world to make them actually stay private to the extent that you want them to be, right? And this will be linked to identity in the future, and you can scale this up and down, right? There will be some needs by law, right, that you have to disclose, but I think there's a chance to actually bring back a bit of control of your data and your identity to yourself and the citizens.
Right. Now, Robert, DeFi and NFTs, or the new kids on the blockchain block, pushing boundaries and challenging traditional financial paradigms. How do you envision their regulatory landscape shaping up to nurture growth while ensuring market integrity?
I mean, DeFi is a good question. We're discussing this internally as well, and there's a big diversion between what to be done, right? Some people say or think that nothing should be done. Others say like, okay, let's treat it like it's a centralized protocol, right? I mean, we just had a discussion with one of the UA regulators about this last week, and they are regulating centralized. They call them centralized DeFi protocols or projects where they know who the developer is and it's easy accessible, right? Like for example, if somebody like Coinbase develops a DeFi protocol or something similar, then they know they can go to a listed company and say like, okay, guys, what did you do there? Right? It's easy because it's a publicly listed company. The question then is, what do you do with the ones that are not, right? That are not run by somebody or open source and developed by a community. Who do you hold liable? And that's again something I think where you need to first see and see how this plays out. What's the uptake of that, right? Is this something that will go to mass market and has billions of users, or is this something that is rather, a niche product, right? Like CFDs, which are used by like a couple of 100,000 people in Europe. And I think that's why the best way approaching that right now, I mean, DeFi is to just see how it works, see what's going wrong, what's going right, as long as it's small. And it is still small enough to justify that approach. And then once we reach a certain level of maturity, to then start thinking about, okay, what works, what doesn't work. But I think there's no way around that we will see KYC methods for DeFi protocols in one way or another, but they need to be linked and designed in a way that you don't hold somebody liable, but you basically as a user have to tap into a KYC process at some point, right? For example, with the CASP or a VASP, as it's called globally. And they will just check that, and then they know who holds the wallet, and then it's traceable, and everybody's happy, right? I mean, at some point, as a normal citizen, you touch or tap into one of the regulated spaces, and once you do that, you're identified anyway, right? So it will happen. There's no way around this. The question just is, do we do it smart or do we do it stupid? On NFTs, just very briefly, I think it will come back to the point that I mentioned earlier, right? Like, what is a tokenized asset that is not financial? I mean, when you look at the NFTs by now, it was mostly digital art, right? And it will be that to an extent, but it could be other things like tickets and vouchers and God knows certificates. And there you have to just look from a sensible perspective. Does it make sense to regulate the digitization of certificates that you can just hold in your wallet, right? Do we really need to do regulation about this? Probably not. So I think, but this needs to get into the minds of people, also on the policy and regulatory front, because in the end, what you do, you just use a specific technology, right? If it would be just digitized by, I don't know, a Microsoft product that everybody knows, nobody would care. But it's because on blockchain, you can do a lot of other things with it. And that's the most confusing part for regulators, that you have all those hybrid models and hybrid projects and tokens and so on, right? That you can use for payments as a security, as a voting instrument, as an entry point, et cetera, right? And that's the wiggle point for them.
Right. Now, JP Morgan's Onyx platform is just a glimpse of blockchain's potential in revolutionizing short-term lending. Beyond lending, what other financial vertices do you see blockchain tech transforming through smart contracts and tokenization?
That's a good question. Actually, I'm not an expert on all the capital markets issues, so I think that there definitely a bunch of them. I mean, when you look at how you execute trades generally, right? Going back to the commodity space, you can ensure for those models that are built on a smart contract or built with smart contracts, a lot of automation that ensures a level of security that you didn't have before, right? When you take a commodity trade, for example, you always had a buyer and a seller. And in order to trust each other, somebody had to move first, right? So you had a bank in the background or somebody that was held liable. But there was always the need to move first in a way, right? Like, how do we do this and how do we execute this, right? How do we ensure that nothing is done? And I think smart contracts will help a lot with these trades. So it will be a great game changer for global trade. I think that's actually, when I look at it from all the use cases in the financial services space, I think the way you could use smart contracts and blockchain in combination with legacy systems will be the biggest impact or biggest game changer, I think, globally. And that's global trade, right? It's the biggest market. Everybody is involved in it. And if you find ways to make it more secure, make it more democratic, right, and more accessible and more safe and secure and more transparent, without the need of KYCing everybody old school way, but you establish this in a trusted public way, then this will change how global trade is done and unleash a lot of the potential, especially in emerging markets for small and medium-sized enterprises, but also in Europe and Asia and others, right?
Right. Now, navigating the regulatory tightrope between fostering innovation and safeguarding market stability is complex. What's your blueprint for regulators and innovators to co-create a framework that champions both?
I think the starting point needs to be an understanding of what's happening. And there's a lot of hearsaying still, a lot of gaps in the understanding, right? A lot of regulators still operate on the basis of reading mainstream media on a high level, just and not going into the nitty-gritty stuff. So you also need a different type of regulators and policymakers, right? You need to have people that understand and can read code to actually challenge the guys that come with you with the technical solutions, right? Because they can't right now. You have a bunch of lawyers, economists, and policymakers that understand potentially what you're saying, but they can't check and prove and do anything about that, right? And that's true for any new technology. It's the same for AI, right? As a developer of AI, you can come in and say, like, it does this, that, and that. And nobody can challenge that. They can only believe it. And you have to build these capabilities out. And on the basis of that, you then can ask the right questions, right? So it has a lot to do with the functioning dialogue between those ecosystems, right? On the one side, the innovators, developer side, and on the other side, the regulators, policy side. And they need to come together and they need to have dialogues. And only when that is happening, you can create all the necessities that regulators want to fulfill, right? Like consumer protection, market integrity, financial stability. And in order to harvest the potential of innovation that this whole sector brings, this is absolutely paramount. If that's not happening, there will be no automated blockchain-based future, right? And the good thing is, it will probably just take longer, but it will happen. But in order to speed up processes, you need to be actively going for that, right? As a company, if you're CEO of a company, you should think about that very hard. How do we can talk to those people and convince them that what we're doing and how we're doing it is the right way forward? Because then a central bank or a financial services regulator will look at you much more relaxed and with a better understanding in order for you to achieve your goal as a business leader or as a business, simple as that, right? And then you can also work together to achieve the overarching goals, right?
Right. Now, Robert, I just got one final question for you. Looking over the horizon, what are the sleeper trends or nascent technologies within blockchain and crypto that you believe could radically disrupt the status quo in financial services and regulations?
That's a very good question, actually. If I would know that, I would probably be retired by now. I think it's not just one thing or one trend, right? I mean, you have to look at it, I think, on what the market needs and wants, right? And there's a huge demand and a huge appetite for volatile assets right now, because if you go to a bank, you put your money on a bank account, you just don't gain anything from it. If you go to work nowadays, the average person doesn't make enough money to buy a house or even the car they want, right? And so they're looking for those opportunities. The question now is, how as a regulator do we look at and approach that, right? Because on the one side, there's a market need and a demand by citizens. And on the other side, your job is to safeguard the environment, create a financially stable and market integrate ecosystem, right? So, and to balance those two out is very difficult. But on the other side, you have then technologies or apps or use cases that enable new business models. And in my opinion, the ones, that's why I couldn't name one particular thing, but the thing I think that will succeed is the one that creates and brings forward a business model that is fit for time and the future, right? Because the current business models don't work. There's a divergent gap between rich and poor, and we don't know how to bridge it. Policies lagging behind. There's no willingness. There's an economic situation that is also not great in a lot of places. And whoever finds a way to do that and enable and empower people to actually participate and create new forms of wealth, right? Like maybe it's how is it called? Earn by play per earn. I always forget the. You know, like where and then it's linked to the new business models that are out there, and you know, with automation, AI, a lot of jobs will disappear and new ones will be created. And the question is like, how do you balance all this out? And I think there's some use cases and project that can balance those out and will balance those out. We just don't see them yet fully playing out now. I think it's too early to say that because there's so many things that need to be done before that till we see this. So I think we'll take another year or two, maybe 5, till we can actually have a proper discussion about this. Right now, I think there's a lot of potential, but there's a lot of construction sites, right? Either it's regulatory, it's investment, either it's the infrastructure. Sometimes 5G networks are needed, right? I mean, when you look at metaverse debates and these things, then you need to have the infrastructure in place first to actually pull this off, right? And it's not a blockchain problem. It's actually that there's no 5G infrastructure there, so we can't unleash that, for example. And then it's a generational thing. I think we're now in a generation in the financial services space where the lower and the middle end or the middle parts of businesses in incumbents slowly get into leadership positions with the mindset that the innovators have, right? And it will take a bit. And once these are in charge, you will probably see a bigger risk appetite as well and a bigger uptake of these things. And you're slowly seeing this already, right? I mean, BlackRock came out with their tokenization proposal and what they want to do and how they see the potential. And you need those voices speaking up, right? And they will get more and more and more over time. I'm very curious, for example, how people will look at El Salvador in a couple of years, right? Like when president there picked up Bitcoin as a legal tender, everybody was like, you're crazy. I think today he looks like a very smart politician. And maybe in 5 years, he will be like the gold standard where smaller countries will be like, hey, that was amazing. He brought them from the bottom to, you know, he's the new Switzerland in Central America, right? And this might have been the play. And yeah, so it's difficult to answer that. But I think there needs to be certain elements that have to come together. That's it. And once that is done, and you see this with regulation, that there's a lot of time and effort invested in this, there will be legal certainty, companies will be thriving, and then the combination with AI, metaverse, you know, I think, and also cybersecurity measures, right? But people always forget that blockchain will enable better privacy, but also better cybersecurity, right? And that's one of the biggest risks that a company has these days. And people, especially in the incumbents environment, more and more realize that these things are actually helpful to safeguard your data, your money, your patents, etc., right? So you will see this slowly sinking in. I think the biggest, and that I will conclude with, the biggest mistake the industry made, this was coming out like, hey, this will change everything. There will be no more banks anymore. There will be a revolution going on. I don't know. Barely. I mean, there are certain things like, I mean, when the printing press, for example, came out, it wasn't overnight that everybody read books and languages were transformed and politics changed and everything. It took also time, right? And the same is true with this. People need to start learning, understanding how it works, what's good, what's bad, how AI works, how the combination of those works. People need to learn it in school. I mean, when you go into high schools nowadays, or in universities, crypto for them is a native thing, right? But those guys are not in leadership positions. Give them 10 years, these guys will be leaders or upcoming leaders, and it will be completely normal to do all of these things, right? And we're just not there yet, but I think we're heading there.
Right. Now, Robert, thank you so much for taking the time and taking the dive with us into the blockchain vortex. My conversation with you has been nothing short of amazing. You have given us a rare glimpse into the future of finance, walked us through the tricky crypto regulations, and gotten us all excited about the possibilities with digital assets and tokenization. So, Robert, thank you so much.
My pleasure.
Hey folks, that was Robert Kopitsch, the visionary behind Blockchain for Europe. For those of you who are eager to connect further with Robert's pioneering journey or to dive deeper into the topics we've explored today, keep an eye on the description below for links and resources we are putting there. We are all about sparking dialogues and pushing boundaries. So jump into the comments, share your thoughts, and let's keep the conversation going. I'm the Chamber Guy, your guide to the tech frontier, and it has been an absolute blast hosting this episode of the Global Chambers Innovator Series. Hit that subscribe button and tune in for more mind-bending discussions with the architects of our digital tomorrow. Stay curious, stay innovative, and above all, stay disruptive. I'll catch you on the flip side. I'm the Chamber Guy.